Aloha and good evening, and welcome to our first virtual homebuyers workshop live from Kauai. And we've got a great session planned for you this evening, a lot of great presenters. And we're going to talk about home ownership. And I was thinking back, I actually didn't own my own home until I was in my 40s. And trying to think of all the reasons I gave myself from not having the down payment and so on and so forth. And now, many decades later, I realize what a great idea it is, especially if you're someone attending this evening that's young. If you start when you're young, you can build tremendous wealth in real estate. So without further ado, we're going to get going. I don't know, you may be watching on Facebook, you may be watching on YouTube, and either way, you can enter your questions in the chat, and we look forward to interacting with you. We are going to hold our questions till the end of the session, but Bailey Hutton, who's a member of our team, will be there and taking care of you. So today, or this evening, we're going to talk about why do you want to become a homeowner? Why home ownership? What's it going to take financially to purchase a home? And perhaps you're viewing this and you already own 10 homes and you're just looking to buy your 11th. We'll talk about the different loan program options, and there are many. I know that when I was young, I thought I had to have 20% down to buy a home, and probably some people do today, but that's actually not true. We're going to explain how to put your team together to set yourself up for success and determine what your needs are versus what you want to have in a home, because sometimes you might need to compromise. How to shop for a home. What are the things to think about? How to write the offer once you do find the property that you are clear that your family wants to go for. What about the contract that you enter in? What are the different contingencies, and what are the things to know, learn, and be concerned about as you go through the process? Once you get an accepted offer in a real estate sale, we go into what's called escrow, and we've got experts here to talk about the escrow process, help demystify it for you, and explain just how that process works. That escrow person becomes a big member of your team. And then at the end, I'll talk a little bit about housing here on Kauai, the state of our market, affordable housing, our inventory. And of course, at the end, we're going to do some questions and answers. So I hope you're ready. And this event is being sponsored by the Margolis team, which is myself, Bailey, and Kat, who you'll meet in a minute. And we are with eXp Realty, the nation's first virtual brokerage. We like to think of ourselves as the Netflix of real estate, and Guaranteed Rate Mortgage, and Fidelity National Title. So without further ado, let me take some time to introduce all the people that will be speaking, and they can tell you a little bit about themselves and say hello.
Good evening, everyone, and happy Hump Wednesday. I'm sorry, I was on your right. I'm Rita Chip, and I get to work with B from Fidelity National Title and Escrow, and we serve as the third party, neutral party in your transaction, and we are excited to educate you guys on the escrow process.
I don't hear you. Is your mic on, darling?
Sorry.
Okay.
Sorry about that. Anyway, welcome to our workshop. I also work with Fidelity National. I'm an escrow officer here on the island of Kauai. I've been in the industry for about 15 years, and definitely real estate is the way towards wealth building. I truly believe that. I bought my first house when I was 23, and that's because my parents never owned a home. The interest rates at that time in the 80s were crazy double digits. So we were never able to afford one. And when I was able to, that was my goal. And I think that's the path that everyone should take. So welcome. I'm sure you'll learn a lot.
Anthony.
Aloha. Hello, everyone. Anthony Valentino here with Guaranteed Rate. Thanks for taking your Wednesday evening with us to share a whole bunch of good information. I am Vice President of Mortgage Lending for Guaranteed Rate, based out of Kauai, and oversee that part of the region. I'm looking forward to showing buyers and potential buyers the process of what it takes to purchase a home, as well as a lot of tricks to the trade to make the process a lot more smoother, and to just kind of take away the big what ifs or the question marks that a lot of people have that maybe are stopping them from taking the leap of home ownership. My job is to help show the path and to show that it's a lot easier than one may think. And so I'm looking forward to this workshop so that way I can show you guys this.
Hi, good evening, everyone. My name is Bailey Hutton. I'm the operations manager for the Margolis team, which means I handle most of our administration stuff as well as managing all of our transactions. I've been a licensed realtor on Kauai for about 4 years now, and the same amount of time I've been working for Ron, and I'm looking forward to the opportunity to work with you guys soon.
Yay, my turn. My name's Kat Ouano Mobley, and I'm the buyer specialist on the Margolis team. Tonight, I'm just going to help demystify the whole buying process and make it digestible for everyone that doesn't know what goes on when you're shopping for a home. So welcome.
Okay, thank you all. Thank you all for being here, and a big aloha to all of you out in Cyberland, whether you're watching this live or on the replay. We're going to dive into the presentation. I'm going to say goodbye to some of my friends there, and they will be back to visit you before too long. And there you go. Bye-bye. Bye-bye to you. Okay, so home ownership, buying versus renting. This is an illustration, and it's an illustration from a time when homes were a lot more affordable, but hopefully you'll get the point. In the purchase of a $160,000 home, if you put 10% down and you had a mortgage at rates that are higher than we have today, this is what it would look like after a period of time. And I want you to think about the financial impact over the long term. As I said earlier, had I known what I know now, I would have started with my first home when I was much younger. And yeah, that's what I would have done. So after 5 years under this scenario, you would have over $25,000 of equity if you purchased that $160,000 home. And if you rented it, you would have zero equity. After 15 years, you'd have over $50,000 worth of equity. And after 15 years of renting and paying your landlord's mortgage, basically, you would have zero equity. And after 23 years, you can see how this is going, right? And at the end, when your home was all paid off, you'd have that full value plus whatever appreciation, and you'd still have zero equity if you were still renting. Here's another way to look at it in terms of what equity is. Equity means what you have that has value, the positive cash flow that is in your home. Here on Kauai, where the current median price of a house is unbelievably over $800,000, let's take a look at a $700,000 home with only 3.5% down. Oh my! So that would be a down payment of $24,500. If you look at this scenario after 5 years, you'd have your down payment, the amount of principal that you would have paid over those 5 years, so $67,028. The appreciation at general market rates, and real estate tends to appreciate over time, a long term between 4 and 5% a year, sometimes more, sometimes less, currently more. You'd have a total equity of $228,908. So if in 5 years you decided to sell that home, it would have been a very good investment and you'd have equity. And that's the whole point, or one of the points. Another aspect of being a homeowner is the tax advantage. and the interest that you pay on your mortgage is deductible. So when you go to pay your taxes, you're going to get a very large deduction. You could think of it, let's just say that you pay $6,000 in interest over the course of a year. You can think of it as if every month you're getting a check back for $500, and your mortgage payment, as compared to, say, a rent payment, is $500 less because of that. Plus, when you sell your primary residence, you don't have to pay capital gains tax. You have an exemption of up to $250,000 per husband and wife, or $500,000 per couple. So you can gain equity that way as well. Many years ago, there was a gentleman from Hawaii, Robert Kiyosaki, and he has a whole set of Rich Dad, Poor Dad books. And he says that a liability is anything that takes money out of your pocket, and an asset is anything that puts money in your pocket. So the big mistake, according to Kiyosaki, that poor and middle-class people make is spending their lives buying liabilities and not assets. He also says that real estate investing, even on a small scale, is a tried and true means of building an individual's cash flow and wealth. So I think if you're watching this and you're still young and you're renting and you get started buying your first home, by the time you get to be a little bit older, you may be moving on to some rental properties, multi-unit properties, perhaps some commercial properties. And many people have leveraged their real estate assets into tremendous wealth. And we hope that you take the knowledge you're getting here tonight and move forward with that in your life and career. This is another reason why you want to be a homeowner. This is a graph from the Fed that talks about the rise in median price. And let me say at this point that sometimes you'll hear us talk about median price, and sometimes you'll hear us talk about the average price. And the average price is literally, if we say the average price for Kauai is X, what we're saying is that if we take all the sales dollars combined and we average them by the number of sales, that'll be the average price. The median price, which is what this is basically what is the number that there were an equal number of sales above and below that number. So what's that price in the middle? And one thing you'll see at the end of this workshop when we get to the Kauai market is our median prices have gone up tremendously. And that doesn't mean that our prices have appreciated. What it means is that we have a lot more velocity or transactions happening at higher price points because we've got an influx of mainland buyers who want to get away from this thing called COVID-19. So that being said, where do you start? And if you were to ask me, if we met down at Starbucks and I saw you getting your takeout order, because you can't sit there currently, where do I get started in buying a home? As a realtor, I would say the first thing you do is go to a lender and get pre-qualified and pre-approved, unless, of course, you're a cash buyer, and then you don't have to go to a lender. We can go shopping for homes. But if you do find yourself in the situation of getting a mortgage, especially with lending rates so low, then you're going to want to talk to a lender. And at this point, I'm going to hand it over to my good buddy, Anthony Valentino, and he's going to take it away from here.
Hey, thanks, Ronnie. A lot of really good stuff that you pointed out. And, just like you said, home ownership is key to building wealth. And in order to do that, you have to start out. Now, obviously, with Kiyosaki, he was talking about your primary residence is more of a liability, not an investment. I look at it as a tool to create wealth, to be able to buy investments so you can generate equity from that first purchase and then start your cash flow. Just like you said, the first thing that is so important when you're purchasing a house is to get pre-qualified. You never want to start the house purchase without understanding of what your purchase price is, what your payment's going to be, what your out-of-pocket cost is going to be. And so some people buy a house and they get pre-approved, and some people buy a house and they get fully approved. And I do the latter. I get my clients fully approved. So that way there's no guesses, there's no question marks. They know their payment, they know they're out of pocket, and they know their purchase price. So that way there's no stress, and they can just focus on finding the right house. A lot of people just don't know where to start. They don't know what it's about. It's very scary to them because it's unknown, right? But I'm here to tell you that home ownership is not scary, and it's not for just a few people. And whether you make a little bit of money or a lot of money, everyone should be homeowners. Whether you are a local or whether you're from the mainland, everyone should be homeowners. And so my primary focus, especially with being a lender on this island, is to really help the community and show them what is possible and how to get started. And so the first thing we want to look at is the financing of the mortgage. So the 4 topics I'm going to talk about are understanding what a home loan mortgage is, the financial requirements that are needed. I'm going to go over all of the loan programs that are available specifically on this island. And then we're going to look at what type of loans are more beneficial and what hurdles that are going to come to us having a home on this island. Once we understand everything that I just talked about, the home ownership question mark is going to go away. And I feel people are going to be more empowered because it's a lot easier to hit a goal if you can envision it rather than it just be a thought. So my objective for this workshop is to help people be able to envision themselves purchasing a house. And it can be done. It's just a matter of finding out how. So let's dive right into this and let's look at this next slide. So understanding a home mortgage. So just like we talked about, what Ronnie talked about, when you first purchase, you want to make sure you get qualified. So what does that look like? How does that entail? So the first thing you want to do is you want to fill out a loan application. You can either do this in person or online. Most of it now is online post-COVID. Technology allows that. So it's very simple and very streamlined to where you go to an application, you fill it out, and then they will send you a needs list of what we need in order to get you approved. And they'll send these documents. These documents include a credit report, taxes, income docs like pay stubs and W-2s, asset documentation like bank account information, 401k information, retirement information, gifts from friends, family, loved ones. This is going to help us understand how much you're going to be able to be approved for. And then we can maybe reverse engineer it. And if you tell me, hey, Anthony, I want to be approved for this much, I can show you what we need to see in order to do that. Once we establish what your purchase availability is, based off of what I see, that's when we're going to work together to find out what's going to be the best program for you, what's going to be available to you more specifically based off of your situation. Loan terms, when you get a home loan, typically are within a 15-year, a 20-year, and a 30-year loan term. The shorter the term, the bigger the payment, or the bigger the term, the smaller the payment. So if you have a 30-year mortgage, then that payment is going to be a lot smaller because you're stretching it out over a long period of time. Whereas if you have a 15-year, then your payment's going to be paid off quickly, less interest paid over the life of the loan, but you're going to see a higher payment. So you want to make sure you live within your means and your utilization looks great and you're not going to be house poor. We want to make sure that that payment's going to be right for you. Obviously, a home has an interest rate. Historically, rates have never been this low. They are historically, since 1970, since the inception of the rate. I'm a little bit younger than some people in this industry, and they tell me stories of them being in the double digits of the interest rate. And so now when we see rates in the 2s and 3s, it's like an amazing opportunity for us. So once you're pre-approved with myself, and once I fully vet you, then that's when I pass you off to Ronnie, and that's when I give you to the agent, so to speak, and you guys start shopping. But that's basically understanding the home mortgage. When we go to this next slide, we want to look at the financial requirements that are needed. In other words, what do I need in order to be approved? So the first thing we need to look at is the credit score. The credit score is the biggest aspect, right? And so there's different programs, and those different programs ask for different FICO score requirements. So there can be some as little as 580 FICO, and there can be some as much as 680 FICO. So it all depends on what program you're looking for. I'm here to tell you, there's a lot of people that stop from doing home loans specifically because of their credit. I'm a firm believer that if there is an issue, then you tackle it head on. And so if you do have credit issues and that's an issue from stopping you, reach out to someone like myself who is a credit expert or a professional that can say, okay, here's your credit. This is what we need to do to get you into that requirement field to be able to purchase, because that you can overcome that. So the minimum credit score is needed. Minimum down payments. There's down payments from 3.5% FHA all the way up to 20% conventional if you don't want mortgage insurance. There's basically from nothing to as much as you want. Again, depending on the program is going to depend on what you're going to be putting down. There is also down payment assistance programs we'll talk about that will cover that minimum down payment to where you will be nothing for the down payment. So we'll go over that later on. You also have a max debt to income ratio. So your debt to income ratio is basically, it looks at your income and it looks at your debts, and that's how we determine on paper how much you can afford. So that way we're not overextending you and putting you into a house that you can't afford. So we need to make sure that you don't have more debts than your income. And that's going to be a big difference. You know, someone making $40,000 a year with no debts can, get a $300,000, $400,000 house, whereas someone making $100,000 a year but has a big car payment and student loans and other things can't even afford a $100,000 house. So the debt to income ratio is massive. Work history. If you're a W-2 wage earner, we're going to need your W-2s and your pay stubs. If you're self-employed, we're going to need a minimum of 2 years taxes. Unless you've been in business for 5 years, then we just need 1 year's worth of taxes. But there are requirements for work history. The biggest misconception is people think, hey, I need to be on my job for 2 years. That is incorrect. You only need to be on your job technically for 30 days. You have to have work history for 2 years, but you don't have to be on the same job for 2 years. You just need to be on the same job for 30 days in most cases. If you're salaried, you just need to be on it for 1 day. There's also different programs out there. There's primary residence, secondary residence, investment residence. So depending on what type of home you're buying is going to depend on what program you're going to be getting. Is it your primary residence, you're going to be living in it, or is it going to be a second home away from home, or are you just going to buy it for purely investment reasons? Asset and reserve requirements. So banks are going to look at, where is this money coming from that you're using for the down payment and closing costs. They have to source it. And then they also, some of them need reserves. So they don't want to see $1 in the account after you're done. There are loans out there to where you can have $1 in the account and they don't need any reserves. So it takes someone like myself to know these options to say, okay, what's your situation? And then what's going to be the best loan for you? Because there's a loan for everyone out there. So those are the financial requirements that are needed on a high level view. And it's not so scary. Hopefully people are seeing now that it's not like you're going to need to see a lot of information. So when we go to this next slide, we're going to take a look at basically the different loan programs that are out there. There's a lot of different loan programs. Let's start out with the one that everyone knows, the FHA loan, the Federal Housing Authority loan. Basically, that's a 3.5% down. So every 100,000 is 3,500. And there's programs with down payment assistance as well. So all FHA loans require 3.5% down minimum, but you can also use state or federal down payment assistance to give you that 3.5%. Now, those programs will have a little bit higher rate than if you were to put your own money down, but the rates are amazing right now, and it's better than renting because 100% goes to the landlord. So FHA loans are great. Down payment assistance FHA loans are great. They're just awesome. And the loan limits for Kauai are amazing. You can go to 700,000-800,000 with these loans with 3.5% down or 0 down. So the misconception that you can't buy a house without a lot of money, that's out the window. Conventional home loans. That's your conventional loan. Typically, it's not for the first-time home buyer. It's for the established buyer. You can put as little as 3% down. 5% down or 20% down. The biggest misconception is people think conventional loans have no mortgage insurance, but they do. If you put less than 20% down, conventional loans are still going to have mortgage insurance. It's just going to fall off automatically once you receive 20% equity, unlike FHA, where it stays on for the life of the loan and you have to refinance it out. But the reason why people go FHA is because FHA rates are typically lower than conventional rates. So if you're going to put less down, you might as well go with the lesser rate FHA and then eventually go into a conventional loan. You also have USDA loans. That's the U.S. Department of Agriculture. That's for rural areas. Kauai is classified as 100% rural area. So you can do USDA, which is 100% financing, meaning nothing down. It's a great program and it's out there and it's not used a lot. And I'm here to tell you that let's use it. So again, that's a great loan. VA loans are amazing. That's for our veterans, and thank you so much for serving our country. So the VA is there to make sure you don't have to put anything down. You have no mortgage insurance, and it's the best rates in the nation. So that's a great loan. You have also jumbo loans, and those are loans when you're going over 7, 8, 900,000. You're going into the big guys. That's 20% down right now. There was 5 or 10% down before COVID, but after COVID, they shut those down, and now it's 20% for the most part. You also have 80-10-10 loans. So 80-10-10 loan is an 80% first, a 10% down, and a 10% second. So you have a first loan and a second loan, and that helps bridge to be able to get a higher purchase price without having to put 20% down, and more importantly, no mortgage insurance. So you're going to have a nice low payment as well. So the 80-10-10 loan is pretty good when you start getting up there in a purchase price. You also have ARMs and interest loans. You hear horror stories about those, right? In the 2000s where people had balloon payments and you had predatory lending. Those loans were when rates were higher. Now rates are historically low. So you don't see a lot of ARMs and interest only now because rates are so low. So there's no really incentive to do a loan with short terms. So basically, most of the loans nowadays, if not all, are going to be fixed rate. And that's what I primarily do as well. So now let's look at some challenges and solutions. Obviously, Kauai brings its own set of challenges if you're not a homeowner. So I have some little issue and solution points here to help you understand of how we come across it. And I think some people will be able to relate with these issues. So the first issue I have here is, hey, home purchase prices are way higher than a single wage earner can borrow. I mean, how can someone borrow $816,000 off of regular wage? And the answer is they can't. And so that's why people are stuck and they can't buy houses because they're making minimum wage. But what I'm noticing on this island is there's multi-families living in these houses. We're not talking one family. We're talking 4 or 5 families, generations down. And what we can do is we can add occupying co-buyers or non-occupying co-buyers. You can have as much as 20 people on a loan. And so if a family is living in a house, renting, making a landlord rich, what's to say that mom, dad, brother, sister, uncle get on a loan together and now they own the house. Now they're paying down the principal. They're gaining equity. They have tax incentives. They're gaining wealth, and they can say bye to the landlord. And so the solution that I have for this issue of the purchase price being too high is let's get everyone on the loan so that way we can stop renting and we can own. And then once that one person gets enough equity, we can start branching out for everyone else. So adding co-buyers, adding non-occupying co-buyers to a loan is going to be a solution for the challenge of having a high purchase price of $800,000 because you're already paying a lot in rent anyways. You might as well put it where it should be, and that's back in your pocket. So the other solution I see is basically a lot of people don't have a lot of down payment. You know, when you think of a house, you think I got to put down 50, 60,000, right? Incorrect. I'm closing on houses with nothing out of pocket right now on this island, closing on $700,000 to $800,000 houses with nothing out of pocket because we're using down payment assistance. They're getting assistance from the state. They're getting the closing costs covered by the seller. They're getting everything covered to where it's going to be minimum to nothing out of pocket. And so the biggest issue is having nothing out of pocket. The solution to that is utilizing USDA loan, FHA zero loan, 3% home ready conventional loans to where we keep that minimum out of pocket cost. You keep that money in your pocket because obviously with COVID, it's harder, of what's going to happen next day. So we want to try to keep those assets as possible, utilize some tactics that we can use to put the buyer in an advantage, maybe have the seller pay some of the cost, bake it into the purchase price. So that way the seller gets their money, but the buyer has less money out of their pocket. There is a solution to where if you do not have a lot of assets, you can purchase. You can also use 401k and retirement funds. In fact, there is no tax ramifications for capital gains or any other extra tax ramifications if you pull money out for a primary residence house. So they know that investing in a house is economical, so they can't stop you from doing it. So just know if you have 401k and it's making 10% yield, you can take that money out, put it into a house, and now you're making more, and it's a good investment. You can also get gifts from mom, dad, sister, brother, aunt, uncle. For FHA, for conventional, 100% can be in the form of a gift. So if you put your mind together, I'm pretty sure you can find it, and you can fix that issue of not having as much of a down payment or closing costs that you need in order to buy. So hopefully that helps you as well. Another issue that we see a lot on this island, it basically has to do with where we're at. I mean, we're on an island, right? It's bad enough to upkeep ourselves, let alone a house. And so at least it's hard enough for me to upkeep, as you could tell. But, with islands, you have, natural disasters, you have weather, you have mold, you have termites, you have a whole bunch of stuff. And so a lot of people think if they buy, they're going to see a whole bunch of stuff that's going to hit their pocketbooks. Well, I'm here to tell you that you can leverage that. It's called insurance. So, you have homeowner's insurance, which covers the house itself, water, wind, any other natural disaster. On Kauai, you have to have hurricane insurance. That's also going to impact you if there's any wind damage or any other damage. You also can get pest insurance to where, you can, make sure if termites hit you, you're not going to see a $6,000 bill. You're going to be able to pay a small copay. And then it's all about maintenance and upkeep. So that way you're not going to see big ticket items. You also have warranty insurance. Warranty insurance covers everything in the house, the hot water heater, the garbage disposal, if you have air conditioning or, the cesspool. If something breaks, if they can't fix it, then they replace it and you're not seeing big in your pocketbook. So it's really important to see warranty insurance as well. Ronnie and the Margolis team, they're just so good at making sure that the buyer is set up and they show them all the options. So that way, when they get the keys to the house, they're not bringing in a liability. They have an asset and it has long-term effects, and they're not going to see big ticket items. So you want to make sure you have a professional that's putting you in the right direction, getting the warranty insurance, the hurricane insurance, the pest insurance. So that way, when these big ticket items do come up, you are able to take care of them without having to spend a lot of money. And you're only spending 50 or 60 bucks a month. That's already baked in your payment. So there are solutions for that to where you can have your house in paradise without it being too expensive. Hopefully that was a lot of information that you could take in. And I will send it off to you, Ronnie.
You're saying hopefully that was a lot of information? That was a lot of information. You don't have to hope about that. Anthony, thank you so much. And it's really great to work with a lender who can be creative and strategize with you. You have many different choices of places you can borrow, and we have lots of local banks as well. I find in my 15 years of real estate experience that working with a broker that's creative and has lots of different options and programs offers the most flexibility and usually saves you a bunch of money. So thanks for giving the information, Anthony, and we'll talk to you a little later on. Now I'd like to introduce our buyer's agent, Kat Ouano Mobley, and she's going to tell you about the next steps in the home buying process.
Aloha, everybody. Thank you for being here. I hope you have enough time to digest all of that information that Anthony just gave you. If not, type your questions in the chat. We'll be sure to get to them in a second. For right now, it's my turn to guide you through these steps. Home buying is pretty mysterious if you don't know what's going on. So the first thing you want to do is put your team together. Your rock solid team will be your lender, your realtor, me, or Ronnie, and your escrow officer. We'll get to B and Fidelity later. Also, in my network and in the Margolis team's network, we have contact information for the most trusted and vetted professionals in this industry, like builders, roofers, electricians, plumbers. So if and when the time comes that you need to utilize these professionals, we'll be able to connect you with them so that you can make the most educated and knowledgeable decision for purchasing your home. The next step is budget and pre-qualification. So if you've already talked to Anthony, you're already pre-approved, fully approved. This is great because now you know your budget. You can be mindful of how much you can look for in the price of your home, and you don't have to be shocked at all. There's no stress, no heartache if you find a dream home and you're like, oh, I love it, but oh, I can't afford it. We're trying to stop the stress and heartache from even happening. So your budget, knowing your budget and your pre-qualification is super important. The next step is the buyer consult. Let's see here. A buyer's agent will represent your fiduciary interest. Okay, so when you decide to hire me as your agent and we establish agency, you then at that point become my client. And my fiduciary duty is to you and your best interest through the whole process. Well, I'll help you understand what your needs are in this consult and what any other information you might need. And also during this consult, we want to establish your preferred method of communication. When you're searching and you're home buying or searching for your perfect home, you and me are going to be talking a lot. So I'm going to be like your best friend. So if you like to text only, that's great. If you like to talk on the phone and chat and have conversations only, and you hate texting, that's great. Just as long as we're clear on what you and how you like to communicate and what's easiest for you, that's important to know during this consult. Let's see. And also, okay, so when a lot of times I get the question, how much does it cost to hire you as my agent? Just letting you know that if you hire me as your buyer's agent, you as the buyer will pay $0 out of your pocket. That's right. The seller is responsible for paying all the commissions. So it's just another benefit of having me on your team as your agent. The next step is to refine your search criteria. So this is basically finding out your situation. You know what your budget is. You know your top price. Do you want to use that full price? You don't necessarily have to. Do you have a preferred neighborhood, or what do you like to see in a neighborhood? Do you want to be on a cul-de-sac? Do you have a specific lot size that you need? Do you have children? Do they all need their own rooms? Do you have a dog? Do you need a yard? Do you have a horse? Do you need a big yard? Are you old like Ronnie and you don't like walking up steps? Do you need a single story home? These are all criteria that we need to figure out. Your time frame. Are you looking to move in the next 3 months or 6 months, a year, 2, 5 years down the line? These are all important things that we would discuss to know your specific situation. If I get to know all of these details, we realtors talk a lot to each other. There's always conversations going around. Sometimes certain realtors will have a pocket listing. For some reason, they're not allowed to put it on the MLS quite yet. It's not on the market, but they give a heads up that it's going to be. And if I know that and I know what you're looking for, sometimes there's that connection. During this time, when we find out everything that you need, your needs, your wants, if you balance out the need versus the want. Say you by the ocean, but you find a perfect home in, more in the mountains. Would you be able to move your want more to your need? These are just little tidbits of things that we can discuss. And then when we're shopping, we can either meet on Zoom and we could do virtual tours. That's the beauty about today's technology, is that you don't even have to be here on island in person to look at homes. If you are here on island in person, we can meet up, go to showings. We do follow CDC guidelines. Everybody wears their masks and everybody's like physically distanced from each other. But if you're a buyer that's looking from the mainland, we can set up a virtual tour online. There's Zoom, there's FaceTime. I can go to the showing and give video while you're there with me. You can ask me any questions while we're going through the home. You're like, what's behind that fence right there? Or, like, what's over there? I mean, really cool that technology allows us to communicate in real time as if you were here, even though you aren't. It's interesting because a lot of mainland buyers lately have been buying homes sight unseen here. And that's another reason why the price of the new home here is going up, or is up. Let's go to the next slide. The next step is due diligence. We all know that everybody can search online for their homes on their own. I mean, that recent Saturday Night Live skit where it was a spoof on Zillow and having Zillow being the next fantasy. Anyways, it was super funny. But yeah, you can search online. You can search on our site, kauaihomefinder.com or Zillow or realtor.com. Easy, super easy to search online. But the benefit of having me as your buyer's agent isn't just searching for a home online. What I would do is do a little bit of research. I would find out the background information of this particular property, talk to the seller's agent, see if there's any backstories. Why is the seller selling? And is there anything that the seller needs in order to sell? Do they need to stay and rent in the home after they sell, after they close? I'll research the history. Was it in escrow before? If it was, why did it fall out? Why is it back on the market? These are just kind of things that you wouldn't be able to really research without the benefit of your agent. There's also the neighborhood. It'd be the perfect home. And if we're doing a virtual walk through the neighborhood and you find that there's too many dogs or something in the neighborhood, I don't know, but the neighborhood is important. And so I would be able to research how it is, how it fits, and what your needs and wants are. Here on Kauai, the wastewater system is a big thing. I would find out and if it's on a septic system or cesspool, if there's any permitting issues that are with the house, if there's any conforming or non-conforming structures, legal or illegal structures on the property, that's all the stuff that I would be able to research that normally you would be able to find out this information if you were just searching on Zillow or realtor.com. So with all of these things, all of this information that you give me for your unique situation, we would take this, we would search, that's the fun part, shopping, that's the fun part. You find your perfect home. You're like, that's it. I have the spidey sense. That's mine. So now what do we do? Now you write the offer up. So now I'm going to pass you along back to Ronnie. And
I was thinking maybe you want to take this part too. No, I'll just I'll spare you the I'll share this with you. And that was great, Kat. Thank you for sharing all that. And I hope if you're a home buyer attending the workshop, you got a sense of the scope of work that realtors do on the front end of a transaction before we even get to helping you find the property that you like. So let me see here. How about we'll go to that. And You can chime in if you want, Kat. When we find a home that you think you want to write an offer on, we're going to print out the comps. Those are the comparable sales of like properties to make sure that we feel confident that there's good value in this home for you. I mean, you want to find the home that meets your family needs, but you also want to get a good value in terms of the equity that's in the home and that it's priced fairly in the marketplace. Like Kat said, early on in the process, you need to make sure that your finances are in place because having all those points together are going to work for you. You know, you don't want to submit an offer to a seller's agent and say, oh, well, I'm working on the pre-qual, I'll send it over to you. You will be disadvantaged to a buyer that's already prepared to do that. And we'll strategize with you to make the offer strong, depending on the situation. Sometimes in our market today, there are multiple offers on properties. And so we want to strategize with you to do what we can to make your offer be as strong as it can be. We want to encourage you to make an emotional connection. Sometimes a seller doesn't necessarily take the highest offer. You might say, you know, my wife and I and our 3 young kids really want to live in this Kalaheo neighborhood because we love Kalaheo School and our uncle is the music teacher there. And it would really mean a lot if we could get this home that's so close to the school. Well, in some scenarios, you might make that emotional connection with the seller, and maybe they have an offer from a mainland buyer that's $10,000 more, but they go, you know what? That's a fair price they're offering, and we'd love to see this family get the house. So we encourage our buyers to always write a letter to go along with their offer, expressing why they want the house and how much they like the house. And oftentimes that the seller will resonate with that. Part of our job is to help you review and understand the purchase contract. We use a 14-page legal contract called the purchase contract, and oftentimes there are addenda that accompany that contract as well. And we want you to understand everything that's involved in the contract, what you're committing to, what time you have to perform, i.e. when you need your pre-approval letter, what's called your conditional loan approval, your final loan approval. And perhaps there are documents about the neighborhood. It might be a subdivision, it might be a condominium property regime, or CPR as we call them. And we want to take a look through and do all that we can so that we make sure we have all the information we need before we support you in buying this property. We're going to monitor all the activity on the property, and like I said, we're going to strategize so that you can get your offer accepted. And then once we negotiate, and again, we submit an offer, the seller has 3 things they can do. They can reject the offer. They'll send the first page back with the word rejection. They can accept the offer, say, yep, that's good, we're going to go, and then we'll have what's called a meeting of the minds. Or they may prepare a counteroffer. Now, in a counteroffer, the other party in the transaction is changing something in the contract. It might not be the price. They may want a shorter or longer inspection period. They may want something like a lease back. If someone's moving off the island and they're not going to be able to get other stuff packed and stuff until April, and you're closing in the middle of March, they may say sellers will lease back at X dollars for 2 weeks or something like that. So you can negotiate. Sometimes you go back and forth. A lot of times other people say they don't like to do that. So we always need to be sensitive of the dynamics of the party that we're negotiating with, because we believe that a great negotiation has a win for each person. And that's what we're committed to, creating these win-win relationships. The buyer, you get what you want. If you are the buyer, the seller gets what they want, and everyone lives happily ever after. So when both parties agree and you have an accepted contract, that's what we call a meeting of the minds. And at that point, it is time to open escrow. And if you open escrow with us, you'll be working with this wonderful escrow officer who I've been working with for probably 15 years now, B. Jill from Fidelity Title. Thank you for coming tonight, B. And I'm going to let you take it from here.
Now you found your property and the contract is in and everything is signed. So the next part is, what is escrow? Nobody really knows about escrow until they're either buying a home or they're refinancing. And so escrow is the intermediary third party that's going to be holding the documents and holding the money. That's what we do. We, myself included as the escrow officer, what we're doing is we're provided with a contract that gets deposited with us, and we are then going to be following all of the timelines and all the conditions of the contract. So we make sure that all those are met because that was agreed upon. That's the contract that was signed. So that's what we do. So once the contract is signed, we get a copy. We're going to reach out to you and say, okay, yeah.
I made a little mistake here, so I wanna just bring your cohort in because apologies.
There we go.
So I'm gonna disappear and I'll let you guys take this together. And my apologies.
B, why don't I just go and then I'll let you go
Sure.
next? Okay, thank you.
No problem.
So I'll just recap it, you guys. Thank you again for joining us. So you met with Anthony, and he has actually pre-qualified you and giving you your buying power, which is a price that you can purchase. You've then met with Kat, and she has sat down with you and she has talked to you about your real estate needs and goals that you're trying to meet. Then she has shown you property, whether on Zoom or in person, and you guys have determined what property that you want to make an offer on. So Ronnie and Kat come together and they write the offer, and there is a meeting of the minds. So the buyer and the seller come into and they sign a purchase contract. And that is what Ronnie regarded or responded and said that you open escrow. And so what is title and escrow? And so I'm going to talk just briefly about title. So I really want to take this moment. First off, this is probably going to be your largest purchase in your life. So we realize and recognize that it's emotionally charged. We as a title company, or we Fidelity, we are the third party and we're a neutral party. So principals, who are the buyer and the seller, you guys are the principals. You give us instruction and we take instruction. So we are the neutral third party to make sure that we get you to the finish line. So what is title insurance? Just like it says, title insurance is necessary to make sure that your rights to the real property you purchased are clear, that transfer of title takes place efficiently and legally, and that your interests as a home buyer are protected in the event of unforeseen or fraudulent claims against your property. So in the purchase agreement, the seller has an obligation to convey free and clear title to you, and that's where we come in. Just as you have car insurance and life insurance, you have title insurance when purchasing a property, and as the buyer, it is your choice on who you get to choose. Note that in the purchase contract in one of the sections, G2, that literally you get to choose your title company. And what we do is we ensure that the title again is conveyed freely. B will go into the details of escrow and what your title policy does, that it defends against different things that may arise. And so some examples are, missing heirs or forged deeds or false impersonations. And so here at Fidelity, know that if you choose Fidelity, our title policy is actually the strongest in the industry, and we underwrite one of 3 policies nationwide. And so when you do open escrow, like B said, you will come in with the check that's made out to Fidelity National Title that is written on the purchase contract, and you will go in and you will deposit it. And then now I'm handing it off to B to talk to you about the specific details of the escrow process.
Okay, great. So, all right. So now you're coming to the office, you're dropping off your initial deposit. And then we start, that's when the escrow is open, that's when the timeline of the contract begins. So what will happen is that once we receive that information, we also reach out to your lender because we all are working together. Our goal is to make sure that this transaction closes in a timely manner. So the contract will have a specified closing date, and we're all working towards that date. So what happens is that soon after the contract is opened, we're going to do a search on the property. And so you will be receiving from us 2 things. Number 1, you'll be receiving opening forms. Number 2, you're going to be receiving from us the title report. And so the title report is the document that our title department, Fidelity National Title, provides to you. And it's a report on what they searched on the property. And Ronnie's going to bring it up in a little bit so we can see what that's going to look like shortly. So what you will receive is an email from me, and it's going to look exactly like this. You're going to click on it. So the first page of this report, the blue section is a hyperlink. And you can view this report one of two ways. One way is you can click on this blue hyperlink, and it's going to take you to another window. And that window is going to show you it's a quick, very easy to view page that shows the owners of the property, the address of the property, and it's going to have a whole section of where all the documents are hyperlinked, and you can view them that way. It's going to show exactly like this. And then it's going to show a list of exceptions. And you see how it's color coded? There's orange. Sometimes you'll see orange and yellow. That's highlighted to bring attention to those items. So those are the items that in escrow we are going to be addressing. And it's not issues that pertain to you per se as the buyer, but they do pertain to the seller. So it's things that the escrow personnel is going to be calling the seller and finding out more information. 9 times out of 10, these are mortgages that need to be paid off. Because through escrow, we want to make sure that once we close, there's no liens against the properties, that all mortgages are paid, that anybody who has anything on this property, whether it's a private loan or maybe credit card bills or anything like that, an IRS tax lien, all those things are paid off and removed so that when you receive the property, it's free and clear of any prior debts and nobody has any claim to it per se. So that's what you'll see on that page. And as I said, it's a very easy to read method that way because all you're looking is just going to be these highlighted items. The other way you can view this document is by scrolling down. So instead of clicking on that first page, you're going to scroll through the report. And if you do it that way, it's going to show you the same information, but now you're just looking through it. And it's all done via email. So when you receive the email, you're going to scroll down. The first thing you're going to want to look is who owns this property, because it's going to tell you who's on title to the property. And that name there should match the name on the contract because that's the seller. The seller is the owner of the property, so that's noted there. When you go to the other pages, it's going to show you the legal description. So this is what attaches to your deed, and this is what follows title. And then the next thing you're going to see is a list of exceptions. And the document could be a little bit daunting, but if you just take a moment and review it, all it's telling you, it's a chain of title. So it's like a chain of events, and it's going through everything that's recorded on this property. Easements, right-of-ways. If your property is a condo, it's going to have bylaws, it's going to have declaration, and every document that's recorded on it is hyperlinked. So anytime you're on this, you're viewing these pages and you see a blue hyperlink, you can always click on the document and view it. Now, we cannot advise legally what the document means or what it means to you, but you can have an attorney review the documents if you have any questions. All we're doing is we're disclosing to you. So we're saying, hey, this is what's recorded on the property. Please take a look. Make sure that you're aware of all the items that are there. Of course, if you have any questions or you need more assistance, you can always go to your team. The Margolis team is there, and they can guide you either to a real estate attorney or they might have information on the property already. So it's always a good resource to do that. A copy of this document is also going to go to Anthony and his team. And the reason the lender needs it is because they're going to be lending on this property also. So they want to make sure that they know exactly, how it's structured, what's there, what's going on, what's recorded against it. So all of those items they will receive as well. So the title report is the most important thing that's going to come out. After you get the title report, one of the other things that we need to know from you, and that's we as escrow, is we need to know how you want to hold title to the property. So here in Hawaii, there's quite a few different ways to hold title. If you're married, you can hold title as tenants by the entirety. And that's just a protection for the married unit. And here's a list. There's Ronnie just put it up. It tells you all the different ways to hold title to the property and how it affects you legally. So married couples are usually tenants by the entirety. If you're friends or sisters or brothers, or you're single and you want to, everybody holds equal shares, then they can do a joint tenants. And if you have different percentage of ownership, then you can do tenants in common. But all these things have something. I mean, for example, in tenants in common, if someone were to pass away and they're on title, then that portion that's owned by that person would go into probate. So a lot of people are, oh, what's probate and how long does that take? It's not anything daunting, really. It's just an additional process that needs to happen. So definitely, if you're holding title in a form that's not tenants by the entirety or joint tenants, you want to talk to your attorney or talk to your CPA and see how those other ways affect you, if that were to happen. So the reason we need to know the vesting and how do you want to hold title is because, unlike buying a car, when you're buying a house, you're actually taking title to the property. So even though the bank has a loan on it and all of that, you're the owner of the property. So you dictate what gets recorded on this property. So what happens is that the lender, what they'll do is they'll record a mortgage, and the mortgage will show up when we do a title report afterwards as the lien against the property. And so that's, I often get that where people say, well, I'm not the owner because I have a loan. No, that's not how it works. You are the owner of the property. You're on title to the property. So you have a say on what gets recorded on this property. So those are the important things. The other thing we're going to be doing is, once we have your vesting and once we have the title report has been issued, we're going to start processing the file. So that's what we're doing, is we're just making sure that we've ordered the deed, we've ordered all the closing statements, we've checked everything that's highlighted on the title report. You know how I showed you the red and the yellows that you might see, mortgages, liens, things of that nature. So we'll process the file to make sure that we have everything in order. And in the meantime, you as a buyer are communicating with your agent, you're communicating with your lender, because their team is working on other things aside from the escrow process. And when you're with a lender, it's sort of think of it as a line of work where you're going to give them documents, they're going to ask for this, they're going to ask for that. And just note that when they're asking you for items, please respond to them as quickly as possible, because a lot of times, 9 times out of 10, anytime there's a delay on the closing date, it's because there's certain documents that were required in the beginning or in the middle or where have you, where there was a bit of delay to obtain. So that slowly causes a delay in everything else. So just keep that in mind, that we're all working towards making everything, for you to have your home. But it's definitely a process that it's hands-on. You can't just sit back and think that, things are going to happen. It's just one of those things. It is a stressful process, but we will make it as smooth as we can. So once the lender is ready, and once our documents are ready, and you sign off on all your contingencies, we're then going to be going into the closing. And the closing is when the lender has a clear to close. You've submitted all the documents to them. They have a clear to close, the appraisal's in, everything's in. Then they're going to give us a call and say, okay, B, the buyer is ready to sign. So that's the time where we jump back into the picture, and we'll call you to set up a time to sign. If you're here on Hawaii, we'll set up with a traveling notary if you can't come in, because with COVID, it's, we're limited to the number of people we can have in our offices. If you're in the mainland, we will arrange for a traveling notary to meet you, and we'll be communicating with the lender. The lender's going to provide us their final fees, and we in turn will say to you, okay, we'll need your final funds. Now, final funds for Hawaii means a cashier's check or a wire. If you're here on island, you can do a cashier's check, no problem, you can wire. But if you're in the mainland and you're coming here to the signing, it's always important to check with your financial institution before you leave the mainland, as some financial institutions require that you be at the branch present in order to initiate your wire. So those are the things that can cause issues or hiccups at the last minute. So always bear in mind that you want to check if you're in the mainland and you're coming here to do any signings, you want to check with your bank before you leave. So that way you can maybe sign some sort of authorization or something so that your wire can be released when it's needed. A lot of times we won't know the final amount until 2 days before signing, sometimes 1 day before signing. Because everything at that point happens really quickly. And, we try our best to get everything out, but the processors for the lending team also have things they need to do. We have things we need to do. And so we all strive towards turning it around as quickly as possible. So once the signing is done, then for us, that means that we'll need to arrange the funds. So we'll have the signing, the funds come in, and then we can set up recording 2 business days after the funds are in. Here in Hawaii, we need to be fully funded 2 business days before we can actually record. That's because all recordings happen in Oahu. So we have to make sure that all the funds come in, then we set up our recording, and then that's it. You get the keys to your new house and off you go. You're all done.
Wow, that's fantastic. B, thank you so much for explaining that. You do such a great job, and we super appreciate you.
Thank you very much.
You're welcome, dear. Okay, so where do we go from here? Let's see. Aha, it's my turn. Woohoo! Okay, so I'm going to talk a little bit about real estate and the kinds of properties that you can buy. One thing to make a designation, we have 2 types of properties on the island of Kauai. We have what's called fee simple, where you own it lock, stock, and barrel, and we have what are called leasehold properties. In days gone by, there used to be lots of leasehold properties on all of the islands. Now there are hardly any. On Kauai, there's just a few condo complexes and very few single-family residences. With a leasehold property, you own the building, you don't own the land that the building is on, and you have to pay rent to the lessor. So that's another fee. For instance, in a condo, when you're paying a maintenance fee and the lessor's fee can be a very high monthly fee. Leasehold property is typically appropriate for maybe an older person who doesn't have any heirs to leave their property to, and they just want to own the property at the least expensive price. But it's a depreciating asset, i.e. the closer it gets to the lease maturation, the less it's worth. So you probably want to buy fee simple property. And most of our transactions are what I would call a standard sale. It's a seller selling property and buyer buying the property. We do sometimes have distressed sales, and a lot of times they are fixer-uppers. And if you're buying for investment, or if you're buying for a rental, if you're buying to fix and flip, you may be interested in those kind of properties. And then we have a small assortment of affordable housing projects that the County of Kauai and other public and private entities are working on. When a property gets foreclosed on, we as realtors called it an REO. It's a bank property. And so when you buy from the bank, you have to have the proof of funds in the very beginning of the transaction. The properties are sold as is, i.e. if there's something wrong, the bank isn't fixing it. Usually the asset manager for the bank is sitting somewhere in a desk on the mainland. They've never even seen the property and they never will. There's no seller's disclosure. When you purchase a property and you go under contract, you're going to get a disclosure from the seller that's theoretically telling you everything they know about that property. They have to disclose everything. If something comes up during the transaction, the seller has to amend the disclosure and give you more information. With a bank-owned property, there is no disclosure. So all the due diligence you might do in a standard sale, you have to do before you even think you're going to buy the bank-owned property. The other kind of distressed property, and we don't have very many of these, are short sales. And that's the unfortunate situation where a homeowner, because of whatever, gets behind on their mortgage. And before you know it, they owe more on the home than the home is worth, and they need to sell it for less than the property's worth. Like I said, we had a lot of these 10 years ago. We don't have very many of them now, but many people are on a moratorium of their mortgage because of COVID. And it's possible when that moratorium ends, there may be some people that may need to let go of their properties through this process. And that's a very complicated process. The one thing that short sales are not is short. They take a very long time to do. It's the bank that's short, not the process that's short. And then I talked about the county of Kauai. Let's see. Okay, now I really see what you were talking about there, Bailey, with the overlay. See if I can get rid of that. Yay. This is a project called Lima Ola that's down in Lahui, and it's meant to be workforce housing. They broke ground in it last year, and they're going to be, approximately 100 and some homes there. There's also, here are two other projects, one in Kaloa and one in Waimea. And so these are housing units that you can buy as long as you are within the particular income eligibility. Most of these, we have what's called the area median income, the AMI, and I think for Kauai, it's somewhere for a family of four in the $80,000 range. So you see here, you have to be at 60% income of that number or lower. So there are income thresholds that you can't be beyond if you want to consider that type of housing. And over time, the county will be building more. The very large project in Hanamaulu by D.R. Horton. They're working through some technical and legal issues to hopefully start their next phase, and then we'll be building hundreds of more homes there. And that's some of the most affordable new housing on the island. So let's do the numbers on the Kauai housing market. And these are some charts that were put together by the folks from Fidelity. And this is talking about the year 2020. And one thing, I was talking earlier about the median price and how the median price is the price in the middle, equal number of sales above and an equal number of sales below. Take a look at 2020. There were a total of 995 real estate transactions on Kauai. In 2019, there were 1,145 transactions. So there were 13% less transactions in 2019, and yet the dollar volume in 2020 was 12% higher. So what does that mean? That means that we had a lot more sales of multi-million-dollar properties in 2020. And pretty much what happened for the year is that in March and April, everything died. There were very few trades. Everyone was afraid. We were all locked down. We didn't leave our houses. The number of listings and the number of sales transactions was down between 60 and 70% in March and April, a little less in May, and by June and July, the market started to pick up, and by November and December, November of 2019 and November of 2020 were significantly greater in the number of business done, both sales numbers and dollar volume of the transactions, than they were in 2019. So at the end of the day, we had a better year sales-wise than in 2019. It's kind of, when the economy is suffering in so many areas, it's kind of hard to figure. Here you can take a look at the median price of the condominiums and of vacant land, and you'll see that there were fewer transactions of condominiums, total of 340 condos sold on island in 2020 versus 405. And condominiums are the kind of product that I would watch carefully. Many of our condo owners are absentee owners. Many of those absentee owners are using their properties as vacation rentals. And needless to say, their income for 2020 was very, very low, especially since March. And so it may be that that part of the market starts to soften. On the residential side, though, we haven't seen anything like that, and I don't anticipate we will. Here's another way to just kind of go through it. So home sales were down 9% for the year, 16% of condos, and vacant land was down 22%. But the volume of single-family homes was up 28%. Like I said, the condo market has softened because not a lot of people want to pay high maintenance fees, insurance, and taxes, plus a mortgage on a vacation rental condo that they currently cannot rent. I have an 8-page report that some of you registrants already got, but if you didn't get any of the documents that were emailed out yesterday and today, please make a note in the chat, and Bailey will make sure that we get that information to you. These files were prepared by Fidelity, and they're great. So what's the current market condition? Well, as it says here on the slide, I'll make myself a little bigger. Home sales prices are up on every island, but Kauai leads the way. And back in October, single-family homes were up 37% from the previous year. There you go. So what's driving this? Why have we had this? When I speak of velocity, I'm talking about the numbers of transactions, the amount of activity that's happening in the market. Well, as Anthony said earlier, interest rates are historically low, between maybe 2.75% and 3%, sometimes even lower. It's a VA loan. There's this national trend of people fleeing cities and other heavily populated areas looking for a simpler lifestyle. People in San Francisco want to get off to Marin County. People in Seattle, which has become unaffordable, are moving east. If they don't mind the cold, they might move to Spokane, where housing is very, very affordable relative to Seattle or relative to a place like Kauai. So many people can work at home, and we really don't know if that is going to go back to the way it was, or this new paradigm of working at home is here for good. And that means many more people can work at home. And if you can telecommute, you can live anywhere. And why not live on an island where there's very little COVID, a magnificent environment, and a spirit of aloha? A lot of reasons. That's why most of us live here. And then there's the lack of inventory, right? Real estate is supply and demand. If there's a tremendous demand, people on island want to buy, families want to get their first home, as we've been explaining this evening. And lots of people on the mainland want to get away. So many people buying without even seeing the homes. They just want to know that they have some refuge in some place that's safe. When there's all that demand and very little supply, that's the formula for prices to go up. And so they have. Additionally, as Kat mentioned, we have 3D technology, walkthroughs, FaceTime, Skype, you name it, many, many ways for people to visually see the properties. And I think I'm amazed when I hear that people bought a home on Kauai that have never even been here. I do understand if I've been coming to Princeville for 27 years and I have a timeshare there, and now I decided I want more than just a few weeks and I want to buy, and I'm very familiar with the area. In fact, I think I want to be at Sea Lodge because it's out over the bluff. Then I pretty much know what I'm buying, and I can see that buying it sight unseen. But I am amazed by hearing stories of people that have bought without ever being here. And of course, the virus has contributed to a lot of people to want to get to a safer place, which fortunately Kauai has been. So thank you for hanging with us for the last hour and 20 minutes. We hope you found some value. And what did we do? Well, we let you know that home ownership is a great way to build wealth and get started sooner than later. Keep your credit score high. The higher your credit score is, the better interest rate you're going to get. And be smart. Don't get your conditional loan approval and then go out and buy a truck before you get to the close of escrow. So now you've changed your debt to income ratio. That's not a good idea. Follow the advice of a great lender like Anthony Valentino at guaranteed rate, and you'll get the mortgage that you want. And there are a lot of options, right? We talked about all the different options of loans from 0 down to 20% down. And Cash is still king. If you're in a position to buy with cash, that's the best leverage you have in terms of writing a strong offer. And if you're bidding against a cash offer, then sometimes it can be challenging and you may have to look for a different property, because for sellers, cash is also king. We taught you about what we do as realtors, that a realtor's a lot more than someone who takes you to see a home and writes up a contract for you. There's a lot more work involved, and we value and appreciate the opportunity to share what we've learned and do the best we can for you so that you become our client for a very long time. We're going to do everything we can so that you succeed in your offer, and you met our escrow officer and you learned all the important functions that escrow does to keep the transaction on track, to make sure that your fiduciary needs are met, to make sure that you get the proper monies if you're the seller, and you pay the proper amount if you're the buyer, and handle as a neutral third party all of that large number of funds. So they're a really important part of your team. And of course, we hope that you will celebrate your accomplishment, having learned all this and gone out and bought your first home, because we want you to be our clients for life. So I'm going to say goodbye to the slides, and I'm going to bring the rest of our party back to play with us. And let's see, Bailey, did we have any questions?
We did. We had a wonderful question here from my main man, Anthony. This is from Juno. Juno asks, Anthony, this is a question in 3 parts. I'll give you the first part. Do you folks work with organizations that help with down payments for first-time home buyers, like the organization called Landed?
Good question. So Landed is an organization that basically is a third party that pairs professionals up with buyers like me. And so basically they're a third party that finds people like me to connect to you. So you can basically forego the 30% cost that they're going to charge you and go straight to the source, which is a lender. And most lenders do have access to state or federal down payment assistance programs, whether it's primary residence, whether it's first-time home buyer, whether it's an FHA 0 program. But each state has a specific set of programs that are available, and also on a federal level. So absolutely, my job is to show you options. My job is to show you what's out there, everything, leave no stone unturned, so that way you know all of your options. You can see them clearly, you understand what they are, and more importantly, you're getting the best loan out there. So in a long-winded answer, yes, I can help you.
Perfect. All right, part 2 of that question. Do you have special programs for union members?
Absolutely. So there's a lot of programs that are subsidized, whether it be the Carpenters Union or the Culinary Union or Teamsters. And so based off of what organization you're with, we will pair with them to make sure we incorporate whatever subsidies or whatever credits that organization will give you. And we will make sure that we utilize any incentives that organization will offer the buyer, and we will make sure we capitalize on that.
Awesome. Part 3, last part. Do you do land loans? And if so, what type?
Great question. So we get that a lot on this island of Kauai because obviously it's a lot of people are land rich and real estate poor, and there's still a lot of land out there. Land is completely different than a real estate transaction because unlike a real estate transaction, there's an actual asset sitting on the land, whereas land, there is no asset. So it's a more risky in the portfolio for the bankers. And so typically with land loans, absolutely, there are land loans out there. Typically, they're between 20 to 30% down. There are different types of loans. You have a lot land loan. You have a construction lot land loan. You have an unincorporated construction loan. So basically, if you're looking to purchase a piece of land and not do anything with it, you're probably going to put around 25 to 30% down. Whereas if you're looking to build on it, and make it kind of like a wraparound construction land loan, then there are some options as low as 20% down for that. So it all depends on what you're going to do with the land.
Very in-depth answer. Thank you very much, Anthony. Ron, that's all the questions we had.
Actually, we have one here for escrow, so I'll put it up on the screen. The viewer says, what happens when I'm in escrow and the survey comes back reporting an encroachment on the property? Turn your mic on, dear. Thank you.
Sorry. All right. So what would happen would be that we would notify all the parties, obviously, that there's an encroachment, and there's two options. First option is that the owner of the property goes to his attorney and they remedy. They can do one of two things. They can remedy the encroachment. I mean, it could be just a fence, or it could be a wire fence that could be moved, and then it's done. The other thing they could do is that if it's a rock wall or if it's anything like that that can't be moved, then you would do an encroachment agreement. So this is where you would, the owner of the property would go to the adjoining property or wherever the encroachment is, and they come up with an agreement and they get that recorded, and so that becomes part of the property. Now, what's important to know is that you as the buyer would need to agree to this encroachment agreement, would need to know that this encroachment agreement is taking place, and you're okay with taking title to the property as long as the encroachment agreement is there. So those are the two things that could happen. And pretty much it shouldn't be the end of the deal, really, unless the encroachment is something that, it's too much, or you as the buyer can't live with, or, it just depends what it is. But it's all addressed through the escrow process. Obviously, we won't proceed to record or move forward until that's settled. If you have a lender involved, the lender also has to be made aware of this, and they have to agree to, if there's an encroachment agreement, to that encroachment agreement as well. So those are, it's common here. They're not killers to the deal, I guess.
Thank you for explaining that. That was a really great explanation. Here's a question that came in. I guess this must be for you, Anthony. Bale, you want to read it?
You're doing great, Ron.
Yes, but you're the thespian, so go ahead.
Is there a difference in interest rates between a second home loan versus an investment loan?
Is there a difference in interest rates between a second home loan versus an investment loan? From what I'm gathering, that question is asking, is there a difference in rate between if a house is a second home or if it's an investment home? So yes, there is. If you are buying a house as primary residence, you're going to typically have the lowest rate. If you're buying a house that's a second home, then that's going to have the second best rate. If you're going to buy a house that's an investment loan, that's going to have the highest rate. Now, obviously, the reason for that is because they know you're going to be making money in the form of passive income on that property. And so the banks understand that that is an investment. And so it's typically going to be either a moderate or a long-term investment. So they're getting basically a piece of their cake as well by pushing the rate a little bit higher, because they still know that you're in the money and you're still making money. So they want to join in that as well. So yes, a second home has a better rate than an investment, but you do have options to where you can buy down the rate. And so when you buy down the rate, you put money towards the closing to have a lower rate overall. Now, that's where math comes in, and we want to look at the amortization to say, how much money are you spending to bring down the rate, and how much are you saving overall? How much are you saving per month? How much are you saving in 5 years? And how much are you saving over the life of the loan? So that way you're making a good economic decision. So make sure that you have a mortgage professional like myself or others that are looking at the math, because math never lies. And so it could make sense to buy down the rate and save 10 times more amount over the life of the loan. So it all depends on the unique situation of that buyer.
Excellent. Well, any more questions, Bailey?
Not that I'm aware of.
Okay. Well, thank you for attending our workshop this evening. And if you know other people who are interested in buying a home, you might direct them to our Facebook page or our YouTube channel. They can watch the archived recording of the event. I want to thank Kat Ouano Mobley, our great buyer specialist, Anthony Valentino from Guaranteed Rate for all the great information, and of course Rita Chin and the lovely B. Jill from Fidelity Title National, America's #1 company, and we're so glad they're here with us on Kauai. And until we see you again, I'll say hui ho, and we'll talk to you later.
Bye.